I mean, where the fuck should I really even start?
Okay, here we are talking about bonus depreciation in particular with short-term rentals. So, realtors, hear me. If you want to attract high net worth clients in 2026, you need to understand the one thing that's driving their buying decisions right now, and that's tax strategy. So, the big beautiful bill brought back 100% bonus depreciation. And short-term rentals are now one of the strongest wealth tools in residential real estate.
Awesome. Holly, I'm super, super excited about this topic and really want to get started. I do want to put a little disclaimer out there. We are not, I repeat, we are not financial advisors, tax accountants. We are here for infotainment purposes only. So let's get the rant started. All right. So Holly, this is super exciting and cool. And I don't think enough people know about it, but it's also a pretty complex topic. So can you break this down basically in layman terms for us? Tell us if you were trying to explain this to a child, basically.
Yeah. And you and I have been trying to educate ourselves on this more as well. And it is pretty complicated. But basically, think of a property as a bunch of different parts. You got flooring, appliances, cabinets, furniture, electrical, land improvements. So normally the IRS makes you write these things off slowly over many years. But with short-term rentals and 100% bonus depreciation, you actually get to write off a huge portion of those parts all at once in year one. So that creates a massive tax deduction immediately.
Okay, I love that. So you get the benefits of this tax, 100% bonus tax depreciation over the first year. Do you get to continue that year over year, or what happens after year one?
Okay, so yeah, no, good question. So the big deduction only happens in year one, which is why it's so different from how it used to be. It used to be more of a phase out. Now it's front loaded, 100% year one. So after that, you still get depreciation every year, but it's the normal amount on the structure of the business. So I'm sorry, the building. So think of it like this. Year one is the big upfront deduction, and years two and beyond are steady, smaller deductions.
So does that kind of make pretty much go back into place the 27 and a half years for residential and 39 years for commercial? Then it kind of staggers down after that.
Yeah, I suppose so.
Okay.
And the reason why high net worth people should care so much about this, why this is pretty important for them to realize as an option for them, is because high income earners get taxed at the highest rates. So when they get a larger deduction, the savings are huge. So think of it like this. If someone buys, for example, a $900,000 short-term rental, which is not uncommon in your market, and the cost segregation creates around $250,000 in bonus depreciation, that can save them roughly $90,000 to $110,000 in taxes in year one.
Okay.
And short-term rentals are one of the only real estate assets where those deductions can offset W-2 income without needing to qualify as a full-time real estate professional like you and I are.
Wow.
That's why doctors, attorneys, and executives, they're all looking at STRs right now.
Okay. Very, very cool. And where could people find out more about this? Say you're looking at buying a short-term rental, or you just bought one a few years ago. What are the best ways for people to find out more information about this?
Well, it's really not going to help them much if they bought the short-term rental a few years ago.
Okay.
It's really, so it only is going to apply for short-term rentals which were purchased beginning of last year, like January 15th or afterwards, and of 2025. And it has to be put in service of that year. So if it wasn't in
2025
service of 2025,
Okay.
you can't do anything about it for 2026, which is why at the very last minute of last year, I got a call from someone on Wall Street about this very thing, wanting to get an Airbnb and put it into service like that day, which was just not viable,
Right.
because of this bonus depreciation in particular.
Okay. And then moving forward, people will be able to take advantage of this into 2026 and beyond, unless Congress decides to change it again.
Yes, right now it is a permanent fixture. This is how it will be
Okay.
permanently, unless it goes through and there's a bill that changes it back. So this is how it will be going forward. Side note, the other, so one other way to capture 100% bonus depreciation is billboards. Random
Okay.
side note. So take a look at that too. But what I would encourage folks is to actually go and review the Big Beautiful Bill. There's a lot of cool real estate stuff. I know you guys have heard me mention this a couple times. I like what I see in there. So go check out the details on this, and then go ask your CPA for a little more clarity on this. If your CPA doesn't know anything about this, then you might want to find a more real estate focused CPA or a business focused CPA that understands this bonus depreciation and what you need to do to capture this. But I really think that realtors should be aware of this, because I do believe that we are going to see mom and pop Airbnb owners leaving the industry this year in pretty high numbers. And you're going to see more leads coming through from high net worth earners who are out of state, who are looking for short-term rentals specifically to capture this bonus depreciation. And if you understand STRs and bonus depreciations even a little bit, just to be aware of this, you instantly are going to stand out, because nobody's talking about this. You're not just selling property at that point. You're helping clients make smart financial decisions. And that's what high net worth buyers actually value.
Absolutely. It's such a good point. And the bonus depreciation is really a tax strategy. It's not a market gain. It lets investors front load depreciation deductions and reduces tax income, not the sales price though. So there's definitely some little nuances that you want to make sure that you are brushing up on, to have some knowledge. And again, just point people in the right direction, and just making it a point that you are knowledgeable. You don't have to know everything, right? But to be able to point people in the right direction that can help them with tax strategies, or helping them make smart financial decisions, always puts you up with a higher level of trust with the client over time, because they really do feel like you're looking out for their best interest. Just like 1031 exchanges is another good one. Maybe we can talk about that and how that helps real estate investors as well. So just being a knowledgeable resource above and beyond is what is going to build the trust and ultimately build your database and your client relationship.
Yeah, I mean, I don't think it's a crazy idea to, use this video, find a YouTube video with a CPA that's talking about this, if you can find one. Use the Big Beautiful Bill itself. Find the page where this is on. Send a newsletter out, a text, whatever, to your database who you think might fit this high net worth kind of demographic that would benefit from this kind of tax strategy, and send out a text. That would make you stand out hugely, and it might make them think about something that nobody had told them before. I mean, how huge would that be?
Absolutely. And again, it's always just with leading with value, sharpening your skill set, and staying up to date on what is happening with bills in the economy, your local markets. It's all so important. And in a industry like we've talked about, where last year was pretty tough for a lot of people, you really have to sharpen your skills. So I'm really glad that we just briefly talked about this topic, and hopefully brought it to light for agents to go and do some more research on.
Yeah. Great. Well, thanks for tuning in, guys. We'll leave it there. We're
Drop
all
us
learning
a comment.
together.
Let us know what you think. We appreciate you guys. Like, share, subscribe, and we'll catch you on the next one.
Catch ya. Bye.
Bye.
That's today's rant, friends.
If you loved it, share it.
And if you hated it, share it anyways. See you next week.